Let me throw up this chart, which, for people wondering if the sell-off is nearing a bottom for China, the put-call ratio when it comes to bearish bets in Hong Kong is still pretty elevated, as you can see. At what point do we see this momentum in selling stopping? And is what's going on with China at least partly informing your view on broader EM?
Yeah, it definitely is informing our view of broader EM. And to answer the first part of your question, we're in an environment now where you may see a low, but you're never really sure whether it's the low. We just need to see some of these uncertainties clear. Take your pick from any of the lists that you mentioned, and a lot of them associated with the war in Ukraine. So we're going to need to see some more signs of clearing the uncertainties. When we really want shorter focused investors right now, just to be a little bit patient, and holding a little bit of extra cash is maybe not a bad idea.
So in terms of where you are still invested, what segments of the markets do you find a bit of protection?
So we've liked the U.S. over international, whether emerging or developed. Now for a couple of years, it's a call that's paid off for us. We still like the U.S. And within the U.S., we like information technology, communications, services, and financials. We really think you want to focus on quality here. That's the reason for the IT and the comm services pick. These are companies that, even though they've been handled pretty roughly here in markets recently, we think there's still good prospects for them in the medium and longer term. And that's where you want your longer term investors really to start averaging in here a little bit, not pay too much attention to the volatility.
JP Morgan was seeing a 10% boost for stocks as big investors rebalance at the end of the quarter. Can we expect such a technical boost in the short term?
Possibly. It's difficult to expect that normal sort of technical bounce to outweigh these many other uncertainties, the Fed, the war, commodity prices, you name it. But that's a pretty tall list, pretty tall order to overcome.
When it comes to emerging markets, I understand your logic that given what's happening with China, you're bearish and you're not very optimistic about the prospects there. But many of these emerging markets are also exporters of commodities, right? Whether it's Malaysia, net oil exporter, or Colombia or Brazil. Are you also not so positive about those markets?
Well, it's difficult. You kind of have to pick and choose, and the ways that are available to invest are largely regional. And so it becomes difficult to pick out the winners. Remember, those countries that are exporters of industrial products are oftentimes importers of food products. And likewise, Brazil is going to be a big exporter of food products, but might have to import a lot of metals. So it's really difficult for emerging markets here to get the story completely right for investors.
When it comes to China, there were concerns about Beijing looking too cozy with Russia and perhaps the implications of that, whether it's a global backlash or even sanctions affecting the markets. Do you go that far when assessing the Chinese financial space, or do you just stick with those valuations and the technicals and perhaps the ongoing regulatory crackdown as well?
Yeah, it's the latter more than the former. What we see out of Beijing is a very studied attempt to straddle the fence here between Russia and the West. China has some sympathies on both sides of that fence and doesn't want to get too far on one side or the other. But really, it's the fundamentals. The growth is slow. The new outbreak of COVID is likely to force lockdowns, which are just going to aggravate the problems that many real estate companies are still having. I think that's a problem that's slipped below the surface in a lot of investors' minds right now. We need to keep that in the forefront that real estate is going to suffer here as more restrictions go in place. And of course, the regulatory regime, as you mentioned, and the increased cost of raw materials. So all of these things are headwinds for China. We think growth will be solid this year, but we don't think the sell-off is quite done yet.